Right now, as you are watching this, there are seniors across the United States, retired immigrants, elderly green card holders, grandparents on fixed incomes who are doing something they have done for years without a second thought. They are logging into their bank app, opening a wire transfer, and sending money back home to family, to a daughter in Mexico, to a grandson in the Philippines, to an elderly parent in India who needs help with rent. It is a routine act of love. It is what good people do. But in 2026, that same routine act of love is quietly triggering a federal financial alert that is landing on the desks of ICE investigators, and the people sending the money have absolutely no idea it is happening. If you are a senior, an immigrant retiree, or someone helping an elderly family member manage their finances while they support loved ones abroad, the next few minutes could be the most important thing you watch all year. Because the rule we are about to explain does not care how old you are, how long you have been in this country, or how innocent your intentions are. It only sees the numbers. And right now, the numbers are being watched more closely than at any point in American history. Welcome to Senior Updates Hub, the channel dedicated to keeping seniors, retirees, and immigrant families informed, protected, and financially secure in a world that keeps changing faster than anyone can keep up with. If you are new here, please subscribe right now and turn on the notification bell, because every week we bring you the updates, warnings, and practical guidance that directly affect your life, your money, and your future in this country. Today's topic is urgent, and it is real. We are talking about the $10,000 rule, how it connects to ICE enforcement in 2026, and exactly what every senior who sends money abroad needs to know before they make their next transfer. Let us get into it. To understand why this matters so deeply for seniors specifically, we have to start with the full picture of who is most at risk. The immigrant senior community in the United States is one of the most generous and most financially responsible demographics in the country. These are men and women who spent decades working in hospitals, factories, restaurants, farms, and homes across America. They paid into Social Security. They paid taxes. They built lives here while never forgetting the families they left behind. And now, in retirement, many of them live on fixed incomes, Social Security checks, small pensions, modest savings, while still sending portions of that income back to aging relatives, grandchildren in school, or communities that depend on their support. This is not irresponsible behavior. It is deeply human behavior. But it is also behavior that the federal financial surveillance system in 2026 is watching with extraordinary intensity. The rule at the center of this conversation is rooted in the Bank Secrecy Act, a federal law that has existed since 1970 but whose reach and enforcement have expanded dramatically in recent years. Under this law, every financial institution operating in the United States, every bank, every credit union, every wire transfer service, every money transfer app, is legally required to file a currency transaction report with the Financial Crimes Enforcement Network, known as FinCEN, whenever a cash transaction meets or exceeds $10,000. That report contains your name, your account details, the amount transferred, and the destination of the funds. It goes directly into a federal database. And in 2026, that database is more connected to immigration enforcement infrastructure than it has ever been before. What changed specifically in 2025 and into 2026 is the depth and speed of interagency data sharing between FinCEN, the Department of Homeland Security, and Immigration and Customs Enforcement. Previous administrations maintained stricter firewalls between financial surveillance data and immigration enforcement. Those firewalls have been significantly reduced. What this means in practical terms is that a financial flag generated by your bank or your wire transfer service can now reach an ICE field office faster, more automatically, and with less independent review than at any point in recent American history. For a senior living on Social Security who is simply trying to help their family, this is a reality that demands immediate attention and understanding. But here is the part that surprises people most, and where seniors are particularly vulnerable. The $10,000 threshold is not the only trigger. Federal law also prohibits something called structuring, and structuring is defined as deliberately breaking up transactions into smaller amounts to avoid the reporting requirement. So if you send $3,000 in January, then $4,000 in February, then $2,500 in March, each transaction is under $10,000, but the pattern is cumulative, and the federal system is specifically designed to detect exactly that pattern. Structuring is a federal crime regardless of whether the underlying money is legally obtained. It is punishable by up to 5 years in federal prison and substantial financial penalties. And for a senior with any kind of immigration status, a green card, a visa, pending citizenship, or even long-term permanent residency, a federal financial crime investigation or conviction can have catastrophic and irreversible consequences for their immigration future. The tragedy here is that most seniors who fall into this trap are not intentionally structuring anything. They are simply managing their limited monthly income the way anyone on a fixed budget would. They send what they can when they can. Sometimes it is more, sometimes it is less. They use the service that is most convenient that week. They split transfers between their bank and a MoneyTransfer app because one has a lower fee at that moment. Every one of those perfectly reasonable, budget-conscious decisions can look like deliberate structuring to a federal monitoring algorithm that has no ability to distinguish between a grandmother helping her family and a criminal moving illegal money. This is not a hypothetical danger. Reports from immigration attorneys and financial legal advocates across the country in 2025 and 2026 have documented a significant increase in cases where seniors and elderly immigrants have been contacted by federal investigators or flagged during immigration renewals due to patterns in their international money transfers. In some cases, these individuals had been sending money home for 10, 15, even 20 years without any issue. What changed was not their behavior. What changed was the sophistication and connectivity of the system monitoring them. Let us talk about who faces the highest risk, because not every senior who sends money abroad is equally exposed. If you are a naturalized citizen with no pending immigration matters, your risk profile is lower, though not zero, because a federal financial investigation can still create serious legal complications regardless of citizenship status. If you are a permanent resident, a green card holder, your risk is meaningfully higher because immigration enforcement actions against permanent residents have increased dramatically in the current enforcement environment, and financial flags are one of the pathways through which those actions are initiated. If you are on any kind of temporary visa, if you have a pending immigration application of any kind, or if you have any prior immigration issue in your history, even something minor from years ago, your risk level is at its highest, and you need to treat this information with the utmost seriousness. There is also a specific dimension of this issue that affects seniors who receive Social Security benefits and send a portion of those benefits abroad. The Social Security Administration itself has information sharing arrangements with other federal agencies, and in 2026, the coordination between Social Security payment data, tax records, and immigration enforcement databases has reached a new level of integration. A senior who is receiving Social Security, sending significant portions of it internationally, and who has any immigration complexity in their background, is operating in a space where multiple federal data streams are converging around their financial activity. This does not mean that every such person will face enforcement action. But it does mean that the risk is real, it is compounding, and it is something that demands a proactive response rather than a passive one. So what do you do right now? Because at Senior Updates Hub, we believe that information only has value when it comes with practical guidance you can actually use. The single most important step you can take today is to sit down and create a complete written record of your international transfer history. Go back at least 2 years. Document every transfer: the date, the amount, the service used, the recipient, and the reason for the transfer. If the money went to pay for medical care, document that. If it covered school fees, document that. If it was for housing expenses or family emergencies, document every one of those as well. This documentation will not prevent federal reporting from occurring, but it creates a clear, organized record of legitimate intent that can be critically important if you are ever asked to explain your financial activity. The second practical step is to consolidate and regularize your transfer behavior going forward. If you currently use multiple services at varying times and in varying amounts, move toward a single consistent service with a predictable monthly schedule. Regularity and consistency in your transfer pattern significantly reduces the appearance of structuring, even when the underlying amounts remain the same. A transfer of $1,500 sent on the 15th of every month through the same service to the same recipient is a fundamentally different risk profile than the same total amount sent in irregular fragments through different channels at unpredictable intervals. Third, if you have not already done so, speak with an immigration attorney. Not a general attorney, not a financial advisor. Specifically, an immigration attorney who has experience with cases involving financial investigations. A single consultation is often sufficient to give you a clear picture of your personal risk level based on your specific immigration status, your transfer history, and the current enforcement environment. Many immigration legal aid organizations offer free or low-cost consultations for seniors, and the investment of that time could prove to be among the most important decisions you make this year. Fourth, be extremely cautious about advice from community members, neighbors, or online forums that suggests ways to send money without it being tracked or reported. Any suggestion that involves intentionally keeping transactions below $10,000 to avoid reporting is advice to commit a federal crime. Anyone giving you that advice, even with the best intentions, is pointing you toward serious legal jeopardy. The only safe path is transparency, documentation, and legal compliance. Fifth, if you ever receive any communication from your bank, from a money transfer service, or from any government agency asking about your international transfers, do not respond without first consulting an attorney. Even a routine inquiry can become a legal matter, and your response carries weight that you may not fully appreciate without professional guidance. The world that seniors navigating international family finances are living in today is genuinely more complex and more consequential than it was even 5 years ago. The financial surveillance infrastructure of the United States has expanded, its connections to immigration enforcement have deepened, and the political will to use those connections actively is at a historic high in 2026. None of this means that sending money home is wrong. It is not wrong. It is legal. It is human. And for millions of seniors, it is a fundamental expression of who they are and what they value. What it means is that doing it safely requires knowledge and intentionality that was simply not necessary in earlier years. Senior Updates Hub exists precisely for moments like this, when the rules change, when the risks evolve, when the system shifts in ways that affect real people living real lives. We are here to make sure you are not caught off guard. Please share this video right now with every senior, every immigrant retiree, every family member who helps an elderly loved one manage their finances. The person you share this with may not know what you now know, and that gap in knowledge could cost them everything. Like this video if it gave you information you needed to hear. Leave a comment below and tell us your situation. Are you currently sending money abroad? What country? We read every comment, and your experience guides the content we bring to you next. And if you have not yet subscribed to Senior Updates Hub, please do it right now. Turn on the notification bell. Join a community that refuses to let seniors be blindsided by a system they spent their lives contributing to. We will see you in the next video.